Hi everyone, welcome to the business analysis and reporting examination classes of US CPA. In this particular video, I'll be walking you through in detail about management discussion and analysis. Right? This is very important chapter, specifically when you start working as a CPA. So you have to take a look at management discussion analysis when you are working as an auditor or when you are working as an accountant. So this is something you need to prepare for the organization. So this particular topic is from format and content of financial section of annual comprehensive financial report of your state and local governmental accounting. So let's dive into to understand more in detail about management discussion and analysis. Second topic, which is management discussion and analysis. Have you guys seen any management discussion and analysis for any company by any chance? No. So if you see management discussion and analysis, financial condition, results and operation. So this is for profit organization. And at the same time, here, let me see on which page we have. Management discussion and analysis and required supplementary information, page number 5. We'll see both for profit organization as well as for the governmental, so that you can correlate the difference between these two as well. This is page 2, 3. Yeah, there you go. So this is management discussion and analysis. Now, when you see like for any for-profit organization about the management discussion and analysis, what all information they provide, if you just take a look about the EBITDA, EPS, ETR, return on investment. So these are explanatory information over and above the financial statement. To be very honest with you, it is more explaining the items or amount disclosed in financial statement in addition to notes to accounts. So this gave like management point of view for the respective account balance, transactions, statistics, or period over period transaction. If you see, they discuss about diluted earning per share, they discuss about effective tax rate and adjustment of tax, they discuss about return on investment, EBITDA, right? So those, and explanation to those as well, right? On the other hand, if you see, they have given the explanation for the respective categories product wise, like crossover, trucks, SUVs, cars, what is the residual value, how much is the units they have, how much is the percentage in current year, previous year. And same way, if you see the sales and revenue, it's being like variance analysis. If you see, they have identified like how much is the impact of volume variance, mix variance, price variance, and other variance, which you might have been studied in your costing as well. And then in bar also, that also include like variance analysis. So all this information is not required as per GAAP, but Security Exchange Commission required this kind of information to be provided in management discussion and analysis by the management. Same way for the governmental accounting. So the management discussion and analysis report is being required. If you see what all information they provide, like financial highlights. So here they'll be sharing the key highlights of the financial statement. What is the total asset? What is the total liability? What is the total change in the net position? What is the total impact of change in activity? Whether the overall cash flow is positive or negative, right? So government-wide financial statement information, and then fund financial statement, government fund, then proprietary fund, fiduciary fund, notes to the basic financial statement, required supplementary information, combination of the statement, then net position. If you see the period over period, government-wide activity, business-wide activity, and the total activity, right? These kind of information they are sharing, and these are like additional supplementary information, or you can say the required supplementary information. This is management discussion and analysis is not a part of main financial statement. but this is considered as require additional supplementary information for the user of the financial statement, so that user of financial statement can understand better. So normally if you see in the financial statement for any for-profit organization, you have balance sheet, you have income statement, you have cash flow statement, you have significant accounting policy, and notes to accounts. These five things generally comes under the financial statement. Same way for any governmental organization also, the statement of net position, statement of equity, statement of cash flow, and accounting policy, and the notes to accounts are being compiled together is considered as a financial statement. In addition to that, there are two types of financial statement required for the governmental you can say organization. First one is the government-wide financial statement, and the second one is fund financial statement. And there has to be a reconciliation between fund financial statement to a government-wide financial statement. These are additional requirement, right? On top of it, to understand the overall financial statement, government-wide financial statement, as well as the respective fund financial statement, management provide management discussion and analysis, which include chart, paragraph, statistics, year-over-year information, which may not be in your financial statement or may not tie to the financial statement, but is being relevant for the user of the financial statement to understand the overall financial statement in more better way. So that's the whole objective of having a management discussion and analysis, right? Now coming back to the notes, what we have done over here, I have summarizes the generally what all key pointers are being used in the management discussion and analysis. And those key pointer I put into a small tables. So this is around, I think, 14 points, right? So we'll be discussing one by one all these 14 points, what generally comes in the management discussion and analysis. So before getting into the required information in MDA, let's understand more about MDA. So in short form, we call it MDA as well. So here you can say MD and A. Right? The purpose of MDA is to provide reader with the comprehensive overview and analysis of the government financial performance and the financial health. It actually helps the user of financial statement, such as like normal citizen, policymaker, auditor, or maybe any lender, right, or maybe any lease provider, to better understand the government financial condition and the factor that may impact its future financial stability. Compliance with the 𝐂𝐸 ensure that the MDA provide transparent and informative insight to the government finance, right? Any doubts so far?
No, sir.
No, sir.
Why MDA is being required? It's being required as per 𝐂𝐸, right? It is over and above the normal financial statement of any government entity. This is called required financial information. So what all things you need to disclose in MDA? The first one is introductory section. So in introductory section, that include the government mission and objective. So if you go back over here, yeah. So this is page number 5. The first one is the introductory. As management of the country of Central Clara, we offer reader of the financial statement this narrative overview and analysis of the financial activity of the country for the fiscal year ended this. We encourage reader to consider the information presented here in conjunction with additional information that we have furnished in the letter of transmittal, which can be found in page number 1 to 8 in this report, right? So consider this information as additional information, right? Then second thing, you see the financial highlights. So financial highlight, a discussion of the governmental financial highlight include key financial result, right? Such as change in net position, revenue, expense, and major source of revenue. If you see in financial highlight, they might have shown the liabilities and deferred inflow of resources exceed this amount, right? So they have discussed about liabilities and deferred inflow of resources, right? Then the total net position. Then they discuss about the total fund balance, right? Then they discuss about total capital asset. Then they discuss about the implemented governmental accounting standard board, right? So these all comes, and then if you see the overview of financial statement, in the overview of financial statement, they have given like government-wide financial statement, information coming from government-wide financial statement as well as the fund financial statement they will be providing, right? So is the information what we are sharing or this theory is being correlated with the practical? Are you able to correlate this theory with the practical?
Yes, sir.
Yeah, Franshi, Surya, Abhishek, Arya, Kashish.
Yes, sir. पूरा line है sir उसके साथ.
Right. Next one is the financial analysis. An analysis of the significant variation in financial data compared to prior year. So you will do the comparative analysis with the prior year and explain the reason for these variation. So if you go down below, you will see the variance analysis, and in that variance analysis, they give the reasons also. So if you see, this is like the variance analysis of the net financial position. If you see, they have done this variance analysis, and then after for these variance analysis, what they have done, they have given the line by line explanation. Here they have given line by line explanation for each item, right? So they have covered all the line items. So what they are saying, an analysis of significant variation in the financial data compared to prior year, and then explaining the reason for those variation, right? An assessment of the overall government, overall financial health and stability, discussion of any change in the accounting policy or significant accounting estimate. So if there is any change in accounting policy or accounting estimate, that also they will be disclosing separately. Right? Make sense? So far, so good for point number 1, 2, 3.
Yes, sir.
Yes, sir.
Now coming to the fourth point, budgetary comparison information. So this is also very important one. Let me show you how it looks like. One second. So there, yeah. So general fund budgetary highlights. So they give the budgetary information and then they compare the budget versus actual for the respective category, right? So that is called budgetary comparison information. A comparison of the governmental actual financial result to the original budget amount, right? And this include explanation of the significant variance between the budget and actual. So that additional information you provide only and only in case of government financial statement. This is not required for normal company, or you can say for profit organization. This is only required for the governmental entity, right? The next one is infrastructure and pension. So information on significant infrastructure assets and any related long-term liability. That means if you have purchased any asset or if you have constructed any asset. So specific disclosure is being required for those infrastructure asset. That means what is the assets you have purchased or acquired, and correspondingly if there is any debt or there is any liability or if that asset is on lease. then you need to give the separate disclosure for the same, such as bond issued for the infrastructure project, right? So I'm sure like you all might have heard like infrastructure bond, which government generally issue, especially like central government and federal government, which are generally tax-free interest rate you will get on that, right? Have you seen like infrastructure bond, NABARD bond, like in India,
Yes, sir.
NHAI bonds, right?
Yes, sir.
What are those
Yes, sir.
bonds? Basically, the money government collect directly from the people, and that money has been invested on the respective project, and they pay interest, which is a tax-free interest in the hand of individual. If any such bond has been issued, then you need to give the disclosure of the amount of bond, rate of interest, maturity, and all those things, right? Information on the governmental pension plan, including the funded status, the plan contribution, and the change in pension. So, do you know like pension plans? What is pension plan? Any idea what is pension plan? Any
Yes,
of your friend, family member, or relative might be working in a government organization by any chance?
Yes, sir.
yes, sir.
Do they get some pension
Yes,
after
sir.
retirement?
Yes, sir. After retirement.
Right. So, what is pension plan is all about? Any idea?
So, sir, India में तो currently there are two types continuing for government employees. Like after 2003, new pension scheme is applicable. उससे पहले it used to be normal pension that government used to give. New pension scheme में sir it ये होता है कि the employee contributes some amount and equivalent amount, or I think double the amount government contributes, and after you retire they will give you back the pension, the amount of investment that you have done along with some interest, equal month equated
Mm.
installment type sort of.
Okay. Any other thought? Anyone else would like to add something to what Ayush has shared? Gurmehar, Surya, Pranchi, Manish, any idea? So pension are of two categories. One is pension plan and second is pension contribution. So, like some of the government entities, or you can say most of the government entity, they maintain their own pension fund plan, right? But some of the government units like PSUs, they prefer not to, own or not to create a special pension fund, but they are being more than comfortable contributing the pension requirement from their side and the employee side to the trust, which is maintaining, or the NBFCs or the LICs or insurance company, which maintain respective, you can say, pension fund. So in the pension fund, like, yes, Ayush, you're saying 50% like the employee contribute and 50% employer contribute, and then there is some amount of interest which is being generated period over period, and at the time of retirement there is an overall fund balance. So at that fund balance, like, like employee will get an opportunity whether he or she wants to avail the entire fund, or they wants to take this as an annuity for the retirement pension benefit plan, right? So these funds are generally of two types. One is funded and second is non-funded. So overall, if you see, let me open an Excel sheet for you for better clarification. One second. So one second. So there is like the pension fund, pension schemes, I would say. One is, you can say, pension plan, and the other is pension contribution. Right? In the pension plan, entity maintain the pension funds under a trust, right? Whereas when it comes to pension contribution, funds are being managed and maintained by banks, insurance company, NBFC, or other trust, but not by management, right? So this is the difference between these two categories about this pension plan and contribution plan, right? So far so good. Any doubt here?
No, sir.
Right? In the pension plan, again, there are two types. One is funded and second is non-funded. Right? Funded means pension liability are appropriately covered by the amount invested by entity and interest or dividend earned by the entity on funds. Right? That is called funded. What is non-funded? Part of the pension liability that are not covered by the amount invested by the entity or interest or dividend earned by the entity on the funds. Right? Make sense? Everyone? Got it?
सर
सर ये पेंशन कंट्रीब्यूशन और पेंशन प्लान जो है इसमें मतलब पेंशन प्लान बेसिकली हो गया, आप कह रहे हो कोई भी कंपनी मेंटेन कर रही है उसको अंडर अ ट्रस्ट, बट पेंशन कंट्रीब्यूशन सिर्फ बैंक्स, इंश्योरेंस, एनबीएफसी किसी और ट्रस्ट को देके अपने एम्प्लॉइज बना रहे हैं. दैट इज द ओनली.
Yes. So the major difference between contribution plan and defined benefit plan is this. In the contribution, my responsibility as an entity is to give my portion of the contribution, right? Whether the amount which is being maintained or managed by insurance company, banking, NBFC, or any other trust, they have proper funds or not to provide to the liability at the time of retirement. That is not my primary responsibility.
Okay.
Whereas in the pension plan fund, if you are managing, that will be considered as a separate trust under the same management, and that management is being responsible for the investment of that fund so that sufficient interest or dividend or returns are being generated to provide the pension to the respective employee in future.
So basically सिर्फ मैनेजमेंट का फर्क हो गया कि उसके कंट्रीब्यूशन में कोई और मैनेज कर रहा है आपके लिए, पेंशन प्लान आप खुद मैनेज कर रहे हो और आपकी रिस्पांसिबिलिटी.
Yes, absolutely true. Right, Franchi,
मतलब
Surya?
एम्प्लॉय कंट्रीब्यूशन दोनों केस में होता है ना?
Yes, employee contribution will always be there. The difference is whether management is managing or they are just giving their own contribution to third party,
Okay.
right? If they
So
are
ये
taking,
funded और non-funded एक बार फिर से clear कर दो.
yes. So for example, the total liability at year end is, let's assume, $1 million, right? That means in future, what is the total liability? For example, you have 100 employees, right? And those 100 employees are in the age of, let's say, 45, right? And now your retirement age is, let's say, 60. So that means you might be doing actuarial valuation, right? Basis on that, the actuarial will identify this much is the liability you need to book. That means the amount which you need to pay future at the time of retirement. So that retirement can be voluntary retirement or the actual retirement or the termination of the employee, for which the trigger happen for the payment of the liability to the employees, right? So let's assume for 100 employee, the actuarial say you need to make a $1 million of liability, right? So for 100 employee, let's assume their side of contribution is, let's say, $400,000, and employer side of contribution is also $400,000, and on those $800,000 that you have invested and you are earning or expected to be earned an interest of $100,000. What is the shortage? So for example,
$100,000.
required liability is $1 million, right? Employee contribution, employer contribution, and interest on is, let's say, 400, 400, 100. Right? So this much amount is called funded. So unfunded is how much?
100,000.
Right? So this is what called unfunded liability. Make sense?
तो ये कहाँ से cover होगी?
So for that you need to make additional contribution.
Okay.
Right?
तो वो basically coming years में वो cover होगी.
Yes. Right? Surya, Franchi, Manish.
So can you just give me
Yes, sir.
plans of non-funded? Like part of the pension are not covered by investment by the entity, then how will they be covered?
Say that again.
In the non-funded part, you have mentioned as part of the pension liability that are not covered by amount invested by entity and employer. So how will they be covered?
So that additional contribution employer has to meet.
Okay.
Because the liability is being mandatory liability, so they have to pay to the employee at the time of retirement. If there is any shortfall, that means the company is not managing their funds properly. They are not investing to earn the sufficient interest or dividend. That is the reason nowadays for-profit organization, they have started contribution plan. They do not get into the defined benefit plan. So there they just do their level of contribution and employee contribution, and there are professional firms who run the contribution plan. Right? Make sense?
Yes, come on.
Okay. So we were discussing about other benefit, other post-employment benefit. So information about other post-employment benefit, such as retiree health care benefit, including the funded status of the plan, contribution plan, and change in other post-employee benefit plans liability. So these all disclosure are being required, right? So far, if you see, like in MDA, management discussion and analysis, there are 6 things we have covered. First one is introductory paragraph. Second is financial highlight. Third one is financial analysis. Fourth one is budget versus actual comparison. Fifth one is infrastructure and pension plans. And the sixth one is other post-employment benefit plan. Now coming to the seventh one, which is economic condition. If you see here, economic factor, and then next year budget and rate, right? So next thing is economic condition. As discussed of the border, economic condition and the factor that may impact the government, financial position and operation. For example, like the government entity is, let's say, any oil and gas industry company, right, that have huge impact of the foreign currency rate, as well as the every time, every second, every moment, you can say petroleum price are being fluctuating, right? So you need to disclose that what are the impact of those fluctuation, maybe the purchase of raw material, impact of the supply, impact on the supply, or impact on the pricing, or impact on the foreign currency. So those all things you need to disclose properly. What all economic condition which is beyond the control of the organization management, and how it may positively, negatively impact the overall financial statement, which include both government-wide financial statement as well as fund financial statement. So you need to disclose that, right? Make sense? Interest rate, investment rate, exchange currency rate, petroleum rate, or maybe like foreign currency, foreign pricings. So all those things you need to be disclosed separately, right? Then after is the capital asset. If there is any significant capital assets you have built, so that also you need to disclose separately, how much is the acquisition and how much is the depreciation on that. Right? If you have taken any significant debt or the bond you have issued, which we were discussing earlier, so that information you also need to separately disclose. On top of it, the management risk management. So do you know what is risk management? Any idea what is risk management?
So basically managing a risk, alag categories, like you have certain financial risks, you have operational risks. So how do you manage your risk internally?
Yeah.
Within the organization is like the entire risk management function, which we call as enterprise risk management, ERS.
Yeah, very true. Anything anyone would like to add to Gurmeher? Maybe Kashish, Ayush?
So it's
Akash?
basically how to mitigate risk in all the operational activities and all the activities of the business.
Yeah. Ayush, Akash?
These steps like first of all identifying the risk, then analyzing the risk, source of risk, and then steps taken to mitigate the risk. Yes, this is all forms part of risk management.
Yeah, absolutely true. So like here we are talking about government-wide financial statement as well as fund financial statement. So when you are talking about government-wide financial statement, we all know there's a huge amounts, huge number, huge dollar amount, right? So when we are discussing about such a huge funds, so there's always be certain risk attached to it, right? So you need to understand normally, for example, for any for-profit organization, right? If I give you like small example so that you can correlate what is risk and how we need to do the management of the risk. For example, they are small company which is like a manufacturing company. So what all kind of risk there may be possible? For example, identification of vendor, right? Whether the vendor you have identified is legitimate vendor or an illegal vendor, right? So that may be a risk. And from that vendor, if you have been order any inventory, whether that inventory which you are receiving is being appropriate in terms of quality, in terms of quantity or not. Or second thing is the rate which is being charged by the respective vendor is as per the market rate, standard rate, or maybe overpriced or underpriced, right? Once you receive the material, have you properly stored them into your inventory, you can say warehouse, right? And once you store them properly, whether when it goes to the production cycle, have you properly allocated to the production cycle, changing from the raw material to the WIP, right? At each stage of the manufacturing, whether we have sufficient labor, whether we have sufficient machinery, whether we have sufficient electricity, whether we have sufficient controls over there, that how exactly the things should be moving from one manufacturing department to another manufacturing department is appropriately taking place. And once the product is being developed, is it being appropriately delegated to the separate area called finished good? And then after it has been given to the sales department, has the sales department made the sales, or is it still lying into your inventory, or may result into an obsolete inventory? Or if they have sold to the customer, whether customer has acknowledged the receipt, whether the account receivable has been booked properly, whether at due date the customer is paying to you, or is it resulting bad debts, right? So if you see one by one in the entire cycle of P2P inventory management and the R2R process, you have seen a lot of risk available, right? How to mitigate those risks is called a risk management. Same way, when you look at the government-wide financial statement, they do like overall budgetary allocation, transfer of the funds, and then implementation of those funds to the actual benefit of the society at large. So in this entire process, there is a lot of movement of funds as well as inventory, as well as infrastructure, as well as many other things, right? So you need to identify the risk in each respective activity, and then you need to identify whether the risk is material to the financial statement or not. If it is being material to the financial statement, then you need to make a sufficient and appropriate control to mitigate that risk, right? So that is called the risk management. So risk management is the information on how the government manage its financial risk, including discussion with of any hedging activities or the risk mitigation strategy. Make sense? What is risk management?
Yes, sir.
Pranshi, Manish, Arya,
Yes, sir.
Surya, Kashish. Got it?
Yes, sir. Clear.
Next one is future outlook. Future outlook means in next 3 year, 5 year, 10 year, 20 year, what all activities you want to do and what will be the number of those activities. So that is called future outlook. A discussion of the governmental future financial outlook include any known or anticipated challenge or opportunity. That means 3 year down the line, maybe like year over year, you may have like future plans, budgets, and outlook. That also you need to disclose so that user of the financial statement understand more about the going concern, understand the direction in which the entity or organization is planning to move forward, right? The next one is compliance with law and regulation. Information of any significant legal or regulatory compliance issue related to government financial operation. Then non-financial performance measure. There are certain measures which are non-financial performance. That means whether the company have young and energetic team members or not, or the company do have all 50-year or 60-year-old employees. So this is non-financial measure, but it impact from the user of the financial statement, right? On the other hand, what is the mortality rate, inflation rate, currency rate, or maybe inventory turnover ratio, debtor turnover ratio, creditor turnover ratio, liquidity ratio, those all are non-financial information, but those are important to measure the performance of the organization. And the last one is other information that is relevant to understand the government financial position and its operation. So those all information you need to disclose in the management discussion and analysis. Make sense? Any doubts so far?
No, sir.
Right? Okay, let's do a practice question. There is one question only. The city Smartville management discussion and analysis is classified as required supplementary information, essential statistical information, basic financial statement, or other. Which category MDA fall? Is it required financial statement? Is it basic financial statement? Is it essential statistical information? Or is it required supplementary information?
So I guess required supplementary information.
It's required supplementary information.
Right? Management discussion and analysis is
Yes, sir.
always
Required.
considered as required supplementary information, right? So we have covered notes to accounts and management discussion and analysis. So maybe here we can take a small break. It's around 12:10. So we can come back at 12:20 and then maybe we can start with the new topic,
Yes, sir.
right? I see. So then we jump onto the budgetary comparison.
Okay, sir, done.
Okay, so
Right? Okay. So